All right, so let's go, ladies and gentlemen. Taking those conferences or what to look out for one after the other when you come to the market, you come to your mind. I'm sure many of you are already used to the weekly, daily, hourly range, which is just similar to CRT. So these three concepts are very, very similar. Now, so if you let me just open it to you. You can don't complicate the concept, okay? So let me just show you CRT, okay, trading, okay. What did he say? In trading, CRT refers to capital range theory, a method that analyzes the price range, high to low, of a single candlestick to understand market cycle like accumulation, manipulation, and distribution. This theory used the concept of smart money to identify how larger players create liquidity, right, traps, and force move to trap retail traders before moving the price in their intended direction. By analyzing the interactions with candle high, candle range, um, candle highs, that's candle range high, CRH, and the candle low, that is candle range low, across different time frame. So irrespective of the time frame, okay, and then right, okay, traders aim to align with the institutional movement for yada yada yada. Do you understand? All right. So the concept of candle range theory, all right, so candlestick range, power of three. So you can see now this candle ring now is almost absorbing the power of three, but there are little slight different of the power of three kind of a thing, but they are still similar though. All right. So candle range, then the power of three, a core concept where price first accumulate positions, then manipulate price to lure retail traders, and finally distribute to exit its positions. So liquidity, smart money create liquidity and all of that. Multi-time frame analysis, analyzing higher time frame candlesticks, lower time frame reveals hidden yada 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 to CRT pattern. A common setup involves first candle establishing a range and a second candle sweeping the range, liquidity high or low, then with a wick and a thick body or candle continuing the intended direction. Okay, how to apply it? Identify higher time frame candle, find the significant candle on a higher time frame, e.g. daily, then analyze lower time frame, okay, on a lower time frame, e.g. 50-minute, observe the price action to see the phases of accumulation, manipulation, sweeping the high or the low of the um, higher time frame candle and distribution. So enter on the third candle if the pattern, all right, confirm a bearish scenario, a short yada yada yada. Now, just to give you a high effect to understand this, so candle range. So it can be one candle, it can be two candles, it can be numbers of candles. So now let's quickly look at it. So we're looking at the candle range. So let's take, I think I did that too. So now when you are going to enjoy more of candle range, you want to identify a kind of a trend of the market need to be identified first. Okay, so let's use example. I'm going to use 1 hour for the CRT. This is how you look at it. Now, when the market is trending, just like gold, I enter gold with it now. So now when the market is trending, so as market pull back, you want to find an entry using CRT. Remember candle range. Now it's similar to power of three, but they are slightly different that probably when you're using it. Now look at it here. The market was moving up like this. So a pullback that creates opposing candle of your trend is what you want to cycle. Let's use example. Market was going up this way. Look at a pullback. At least a significant candle. When you are doing a candle range, you need a significant candle. If you are doing a candle range, a significant candle. So what do you want to do? So on 1 hour, so I'd like to just use 1 hour to simplify the whole thing. So what you do is that look at this 1 hour candle, you box it. Are you following? You box it to mark the high and the low of that candle. So next you want, please understand, this is the first candle, which is this. So you have boxed it, both the high and the low, all the candle, that's the range. Now what you want the next candle, you know you are bullish, okay? So what you want is that the market should buy up. So if it's going to buy up, this candle now that you range, the next one should open like this. All right. So with the wicks, all right. So the wicks, okay. So now let's go. So you have put this range. What you want is the candle, this second candle, right? Need to form, create, and close inside. The longer the wick, the better the signal. So this candle should create, open, round, you know you are going up. Then a bearish candle that's formed, like this one now. So this candle should form and close inside this range. So once you form and close inside this range, at least a long wick, you are looking for an entry. Okay. So looking for an entry here is very fantastic. So now your next entry should now be the third candle that's going to open. So that means you are going to, so why I prefer to use 1 hour so that you can find a trade. If you use daily, you are going to wait for a very long time before you find a trade. You get it now? So here you market pullback. So that means this one will not work for you. You avoid it. Then you go to the next one. So you mark the range again for this one. Can you see now? This. So you mark it. Now, as long as this candle refuses to close inside this range, it's not your trade. You forget it. Then you come back. Look at the last one. Right? This is the last one, right? So you mark it. You know, why are you marking this candle now? Because it's opposing the trend. So opposing the trend. But don't rule out the fact that too, you are mark your market, you know your structure. So knowing your structure is very important. It's a fundamental because so you are marking this until it has broken structure. You know that it's no longer valid. So you understand all of those aspects. All right. So now, so this is the range. Now this will make a lot of sense. So if this is the range, what you want to do is very simple. This is the range. You have marked this candle. What happened? This candle opened, all right, and then had a wick, though not too long, and then closes in the range. Aha, you are interested. I hope somebody is following. Very simple strategy to use and trade. Now you are interested. So this is the first candle, which is now related to power of three. This is the first candle, which is accumulation. This is the second candle, which is manipulation. So this one was the range. Then this is what manipulate out to sweep the liquidity of the low of this candle. All right. So after sweeping, then it closes inside this. Now this is not your entry. Some people enter immediately this candle close inside this box. Yes, some people enter that way. And so when they enter, what do? They look at it. If this candle is very long, they exit at the close of this candle, but no problem. But look at these three candles that form. So that means this is a what? This is a swing high, right? This is a high. You get it now? So what they do is immediately when this candle closes, they find an entry like this. At the close of this candle, when this new one is forming, they find an entry. Where is their stop loss? Their stop loss is below the wick of this candle. And then where is their take profit? Their take profit is at this swing high. Do you get it now? Which is why ratio 2 risk reward make a lot of sense. That's one. Now, this one is one entry strategy. So the next strategy is that they now go. So after this candle closes, you want to go to 5 minutes. I'll be able to go because this time has passed for a long time. So they want to go to 5 minutes, all right, to refine the entry properly. How do you go about refining the entry properly? You refine the entry properly because when you go to 5 minutes, when you step back to 5 minutes, you are looking for certain things. a move and a fair value gap created. So you can now see where I'm now explaining these two concepts together now. So you can see that they are interwoven. In my explanation now, it has crossed across CRT, power of 3, sweeping. So this timing is just to make the high and low. So I'm explaining. So this for FEG, all right, this is FEG. Then there's another style of entering with the Fibonacci level. So I think these concepts are just simple to explain. You have seen the power of 3 in an area of interest and all of that. So now what you want to do is to go to 5 penny. And so let me use a closer one that will not give us issues. Now, so look at this market was going up. Are you seeing it now? This market was going up. So let's say this is a pullback. You see this candle. This is the first opposing candle. This is your range, right? So you mark it, mark this candle. And see what we are doing here is purely price action. All right. So you may not find it all the time, but when you find it, you can be sure that this thing is going to play out well for you. So there you go. But you can see how this one was manipulated. So that means they're telling you that not all the trade you win. So if you do that, this trade now is going up here. Okay, so now this candle has pushed. Now this is a very perfect one. Now, so somebody who just entered the close of this, well, he may be targeting this up. So he will eventually make money. But that will have been a very much issues for him, right? So this was a very good one, all right? Then this market, because you already understand that these are not trend, so that's why you are. So if it's a downtrend, you do the same thing. So this one, this new candle, see this new candle. So that means this trade you will have lose it. So when you mark this one, this candle range, this is at close, you have lost this trade. Now this one again, you mark this one, this long one, this one eventually did not even close. That's not your trade. You mark this one. Do you see this one? You mark this one. So let's go. So now, as you mark this one was not valid. You see now? Do you know why it's not valid? It didn't close. But this is the opening, this is the close. It didn't close inside the range. It's not valid. As far as market refused to close inside the range, it's not valid. So let's go. Now you have another range. This is another range, right? So let's mark this. So this is another range. So what you wanted was, right? What you wanted was that the market should what? Should come down, manipulate. So the candle you are looking for, you didn't get it. You can see patience is very important. Must achieve this. Okay. So this, what you are looking for, it didn't come up here. You want a manipulation. So there was no manipulation. So you have no found a trade. Look at this. This is not your candle. Okay. Even though there's a fair value gap here. So there's a confluence that may make you have confidence to want to take trade at all costs here. And so you can so three things now combine here. Thank you very much. So what will have made you to now enter? You've seen that that's why when you open your market, you are marking fair value gap. So now look at the fair value gap here. So the market has traveled to the fair value gap. So marking to this fair value gap makes you to look at, okay, this is my thing. So let's box this place now. Let's see something. You are now saying this is your thing. Yes, because the market came and filled the gap. So what you do in the gap is simple. Now you want to find an entry in DCA pattern. And then use what we call GAN box. So you want to find an entry like this at the 50% golden zone for this market. Everything now. So now let's go. Let's go to 5 minutes to check a refinement. See what you are checking, a refinement, right? Or probably 1 minute. So you can see this is the market. So another thing, so let's quickly go back to 1 hour for so that where should I put my stop loss? Okay, your stop loss here, if you enter this trade, you know, this is a fair value gap. This is the candle that initiated the fair value gap, this one. And this is the one that caused the fair value gap. So that means look at where your stop loss is going to be. So you can mark where your stop loss will be. So your stop loss is going to be down here below this 33993. 33993. That's your stop loss. So when you now find your entry, like I've said, so let's go back to 5 minutes, possibly. So you can see this is what do we call it? So you can go to 5 minutes, 3 minutes, 1 minute. This is A plus setup. Okay, A plus setup. So let's go to 1 minute because you want to see market structure shift. So this is 1 minute. This is called refinement. And then you want a massive. Now, this is another thing you must take note of. When you get to your area of interest, you want to see some massive stuff happening there. Okay. So here, what you have is this. This is a low, and this is a high. So now here, this is the now new low. So this is a high. Okay, this is a low. This is a low. This is a high. So the next low is this. Now this market, you want it to break this before entering, but that's not a problem. So let's now mark this point. Now, so what you are now doing is that you are now doing MSS. Okay. So now look at it. Very simple. The fantastic thing here is this. This market came down and created a low. But look at another low was created here. Look at this low. High. Another high was created there. And then a new low was created. So now, when this new low was created, what you want is this high to be taken. But funny enough, the two were taken at a go. So you are waiting. Now, the best option is that the market should return back to this point. So you can see the level of discipline you want to have following an A plus setup. So, do you see something? I'm sure you can see something. Can you see something now? So, yes. Imagine you, market came back, but had not gotten to this point. Though there are some persons immediately, they have put their limit order for the market to enter here. They put their limit order here, center, 3 cent entry. Here, center, that is here, center, and last. Their stop loss is here. Do you get it now? So they say bogus? No. What is your entry volume? So 125 is what you are risking divided by 3. I've told you people about this, that you have to understand it. So they have entered that way and put stop loss below where? Below this soil. Because that's what for the cause the value gap. The market continue to daily die. So if you look at it now, for somebody who probably entered from here, 3 positions, right? So let's say 1 is here, and then the stop loss is here, below this point. So 1:3, 1:2 risk reward, 1:2 risk reward, 1:2 risk reward. So here is 1:2 risk reward. So you can see the market. So then the second one here. Why the third one here? So now let's go. 1:2 risk reward. Where is it? Oh. Trading is meticulous and it's mechanical. Am I in order? Too fast. That's okay. So 1:2 risk reward. Another one, in that order, you are setting in a scale by scale. And then see what will happen. The market, maybe 1, 2 have sold for you. And the market again returned back to fill this gap. Look at this gap. It came to fill it. And I haven't filled that gap. See what will happen. The market now start moving massively. Now it has crossed this point now. Do you see it? So now that is one. So you have seen, like, because there's a fair value gap, this is an area of interest because there's a fair value gap. Okay? So you can see in the same place, three things happen, three confluences happen. A fair value gap, which has made you to enter with this and put your stop loss below this candle that formed the gap. That's one. Now, let's now go to this CRT. Let's go with the CRT. So this CRT now, so you are waiting. You can see many things that were formed here. So this CRT, let's go with this CRT now. So this candle, no. So look at this candle. So this is an opposing candle. This is an opposing candle. So now let's go. You box this opposing candle. Fantastic. You see it now? You box it. Now, having boxed this opposing candle, that gives you what you were looking for. Perfect. So this is what you were looking for. Perfect. Now, what happened? The next candle to need to sweep this opposing candle. Oh, fantastic. This is a nice setup. So, and close in the range. It can be at the mount or anywhere, but it has closed in the range. So I told you that some persons immediately, what do? They just enter long at the close of this candle. And their stop loss is below this wick. So now where is their target? Their target is this high. So if you look at it, this high is 1:2 this one and all of that. And then they have put their take profits and all of that. Another model of entry. Remember, this is this candle, right? So this is the second one. All right. So what do they want to do? So what they want to do is this. Let's go this way. This candle. So what do? They wait after this candle closes. They go back to 5 minutes. See what they want to do. So when they go back to 5 minutes, when they go back to 5 minutes, what they want to see is that let the market move and create a fair value gap. Okay? Let the market move and create a fair value gap. So at the fair value gap, when the market return to that fair value gap, is their entry. So let's look at it now. That means that person is waiting, right? There's a fair value gap here, was never filled. Are you seeing it now? All right. Let's go. Then we have a fair value gap here. This was filled. This is the entry for this fellow, right? So this entry for this fellow, entry here, or this is a fair value gap. So he's entering here. So where is the candle? This is the candle itself. So below it is his stop loss. So this is the stop loss. And then 1:2 risk reward. We'll have even close. Too close, F. I think these are people doing like all those 50 pips, 60 pips kind of a thing. You understand? So it will have entered. It will have entered. So these are refinement. Can you see now? So let me just take one small position. Now this is what 5 minutes. So in 5 minutes, see what I was showing you. See the fair value gap here. This is another one, but this is not properly filled. So I don't know if it's going to be filled. So if I say, let me take small position here now on gold, all right? So then that means this is a fair value gap was supposed to be filled. That's another new entry. All right, that's another new entry. But my fear is that there's a fair value gap here that was not filled. You know, gold can be very mad. So he could return back there to do whatever thing he wants to do. So there was a fair value gap. See another fair value gap here was never filled. And this one, so it's not properly filled yet and all of that. So it then means, you know, so but if you look at it practically, you will have find the entry as prompt as possible. But like I told you, these are confluences. Okay, these are confluences that you are targeting and all of that. So, but in a nutshell, if you train your eye, you can see, you know, 2, 3 confluences that you are looking for at a go. Because here was already a good buy zone because of, right? Because of, call it for me, because of fair value gap. Now, I've explained about CROT, and in explaining CROT, now it gives you, so but CROT, like I said, there's a good time frame that is very, very fantastic, like 1 hour if you're a day trader. 4 hours too is good if you're a swing trader. Now, if you're a position trader, daily is good. So the higher the time frame, the better, the more reliable the trading opportunity or signal. Okay, so power of three CRT, they are similar, all right. And then I've told you about the Fibonacci retracement. So now let's go. There are three things now that will make this setup we now understand. Now, so here we talk about Fibonacci retracement, right? So now let's go. This is a swing low on my 1 hour time frame. All right. This is not a swing high. This is the swing high. So I want to find an entry by using my Fibonacci retracement, or even if my gun box, look at my gun box. And here to this place. Can you see my gun box? So it actually came to my gun box, though it didn't come to a discount level. Coming to discount level will have been more fantastic though. So, but no problem. All right. So you can see I've entered, and now I'm going to use my Fibonacci retracement level. Please, for better understanding, you need to watch the video again and again. So let's go this way. So can you see now? So using your Fibonacci retracement, what have we seen? We have seen that the market actually came to 50, but not up to the discount level. So it's still at the premium, which is not fantastic for me though, but nevertheless. So because there's a fair value gap, so the answer was created. He has filled the gap until that's a fair value gap is one of the most powerful area of interest that you want to pay attention to in the market. So with these, you're already looking for a way of entry. You understand? And so that's what it is, as it is, probably finding. So you will have been in the trade and then watching for the market to go up to this point. Now, getting up to this point, you will be taking profit, and then probably you want to trail because this would be the next break of structure. And so part of three, and so just explain the concept of CRT along with the power of three. Now, practically on power of three, it can be formed anywhere, and then especially on a higher time frame. I use example of the retracement formed by Bitcoin. Let me check. Previously, on a daily time frame, right? So that. So I just want to use the concept of power of three, which is still like CRT. So you can easily spot them. So they don't form all the time, but you can easily spot them, especially when the market gets to a point of interest. Now, look at this. What formed this reversal here? This is power of three. This is the first candle. So market is going up, right? It's an uptrend, massive uptrend, very fantastic one. And so this is a powerful CRT, but was not, right, properly formed though. But this is candle range here, here. So you will now ask, there are situations where the candle refuses to close go beyond the candle that was first formed. So you have to understand too. So, but now let's take this one. Power of three. This is, and which you can still form CRT on. Look at it here. You see now. Now, power of three means you are going to have three candle form, or you can have single candle form. So they are in different patterns. So I have other class I have to teach in detail too. Here, this is the accumulation, this candle. The center candle is the manipulation. And the manipulating candle should be higher in the case of bear market, should be higher than both the left and the right candle. Now, so this is a sweep of liquidity. So it has swept the liquidity then that means if this is a daily candle, you are waiting for 3 consecutive days. And most time, it's usually from Monday, Tuesday, Wednesday. So you see a very good buy or selling opportunity on Wednesdays, most time when you look at the market, right? If I check this now, okay, this is actually Wednesday. Okay, this is Bitcoin. This is Wednesday, this is Thursday, and this is Friday. Weekend. See now, this is Bitcoin. So this is Wednesday, Thursday, Friday. So even where you are buying, so this is Tuesday, this is Monday, all right, and this is Sunday, this is Saturday. So here, this power 3 is 4. Oh, fantastic. I'm sure after this lesson, you are telling yourself, well, I've been making a lot of mistakes. So you see a higher time frame, you see market clearly, right? So here you come. This power 3 has formed, these candles have formed. Now, after the close of this candle, this second candle, you want to look for an entry. I'll use Fibonacci a lot. So I plot my Fibonacci retracement from the high of this candle to the low of that same candle. All right? So I do that, and then I want to look for an entry. You go to lower time frame, maybe like 1 hour, 15 minutes. Why you see this market travel up to this point? It's not because of it wants to travel. You may have that there's a fair value gap there. So if not, it will have just traveled to how many, what 50% retracement level, or all right, 50% retracement level, or 50% retracement level, or 60%. Now, this is where you see one of the fantastic things about bekenet software. Let me tell you something. Because this power of 3, this is this close, this one. Now, you see that when it gives signal sometime, now some will enter at the close of this candle. You are going to tell yourself, why do you enter market that is bullish? They have spotted power 3. So what's going to be his stop loss? Above this candle, the wick of this candle is his entry. Are you following now? So where will be your take profit? Of course, you're going to be looking at 1:2 risk reward. So if you look at it, 1:2 risk reward, some will go back to the low of this candle that form the range. Then now continue to trail other position. Have you seen how powerful? Now, this will have formed how much? This will have formed amazing 1:7 risk reward. Okay? Losing about less than 1%, then making about 7 point something percent. So that's how powerful, but patience is actually required. Now, this is another powerful C of 3. Look at this candle. Very massive dump. And then you have this. So like candle range and like power of 3. Okay, I think I even gave this signal. Many did not observe it. I gave this signal, ladies and gentlemen. If you remember, I gave this signal. So there's a manipulation. So I gave this signal, and then it formed an inside bar. Now, this is a long candle, which can form a C of 3. And then what happened? We have the second candle. So most traders who don't even want story, what do? So this is the second candle formed. It closed inside the range, right? Because this is the opening. You manipulate down, and then it closed. So most traders, look at what they are going to do. Long, and then this close of this candle is their entry. And then their stop loss is below the wick of this center candle. Are you seeing it now? So then that's almost 1% plus. Whatever the market is doing here, they don't care. And then 1:2 risk reward. So first target is the close of this candle. All right, that's the high of this candle. Then the next liquidity. Then now targeting where the market came from. Are you seeing it now? So trading is easy if you can be patient. But if you cannot be patient, it's difficult. Then imagine such trade that you were riding and continue in that order. Now, let's see what happened. Let's see what happened here. You didn't close here because you were still targeting to go more. No problem. Look at where I'm sure you may have to close. If you are paying attention to this, so you are likely going to close. But look at how much is this? 1:12 risk reward. Within how many days? Within how many days? Okay. So from 16th September to 8th October. Okay. You're just in a trade that turned to a swing trade. Then we'll come to see another power of 3 here that is now causing this reversal. Look at it. This is the candle, the first one. This is the first one. This Sunday, then this is Monday. He manipulated it out. Look at it. So it has closed in the range. Now let me take my Fibonacci retracement. Can you see now? It came to 50% retracement level. Remember what we say, right? That, no, it came to 61. Exactly 61. And so I will always say power of DCA. Maybe if you are a future trader, you are entering one at a bit. Here, 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 in that range. Right? But remember what I told you, that other trader is going to do like this. So what I told you, remember what I told you, that some other traders are going to do like this. Simple. At the close of this candle, they enter, their stop loss is above the wick here. Then their take profit, 1:2 risk reward, or close of this range. Okay? But let's look at 1:2 risk reward. So that means they have finished the trade here. Ladies and gentlemen, I hope you are seeing something. That's, you see how the market, the candle range story is very powerful, and then the power of 3 is very powerful. And then, so the market was doing what it's doing. So this is another range ordinarily. Now, this candle, it will have been more powerful if this closed below here. But nevertheless, this is like an inside bar. So this trade may actually reverse, because that's another concept entirely, but I won't teach it. Inside bar. That's a different concept entirely again that can cause a reversal. So look at it, this is an inside bar, right? So this trade now, you can see you open here, this candle open here, crashing down and all of that. Don't be surprised at the today movement, you will see this candle emptying up as it were. But it's already at a key level too. So the market may buy back. Are you getting it now? So this is a powerful tool now, and simple, but you train your eye, but patient. You need serious patience. You need serious patience. If you are not patient about this, you're going to make a lot of, hurry mistake. You will jump in where you are not supposed to jump in. Where you're supposed to cool down, discipline yourself, you wouldn't. All right. So it can still be formed in 4 hours. Look at it here. Look at power of 3 here. Accumulation, manipulation, distribution. All right. Look at it. Accumulation, manipulation, distribution. Your stop loss is here. So no matter what is happening, you're not perturbed at all. So you are still targeting your trade. So this is not a perfect one. Okay, so don't think it that way. So this is not a perfect one and all of that. Okay, so if you are now trading candle range here, this will have been your mark. So here, you see, you box this, it didn't close in the range. You box this. Okay, so this probably, look at this candle. And I think I've observed that the first candle, the first bearish candle don't usually play out. Have you observed that? See, look at it. Look at this candle. This is the first bearish candle. As you tap it, this will actually close in the range, but it didn't give you what you are looking for. Second to third candle is what normally plays out. That I've observed on the value of 1 hour. Now look at this. This is the third candle, third opposing candle. So what happened? The market closed in the range. I told you that other trader, the close of this range is their entry. Their stop loss is here. So that means they will have done this. All right? They will have done this. Their stop loss is below here. 1:2 risk reward. They are okay. So you see the trade play out. So, but understand that not all the trade you win. Right? So look at this. The first candle and the second candle. This is an inside bar. Okay. So that's an advance you may need to learn, but I'm not going to teach everything. So this is the range. Then the market close inside the range, which is another sign of taking your trade to enjoy your ride and all of that. Okay. So these are very, very significant aspects that you train your eye to see the market and be able to take trade. So if you go to 1 hour, the same thing, right? So you can see patience is very important. Okay. You need patience, right? Now, that's the aspect of CRT I think I've been able. So you can see you can't teach all these concepts without interwoven them. We're teaching CRT and power of three, and at the same time, we got into FEG, and of course, the market structure shift, then Fibonacci retracement level. So the other aspect I've not talked about is order block. Engulfing too is another thing that work along with the CRT or power of three, right? So what do I mean by engulfing? Sometimes the three candles that form, instead of three, two is formed. How? You will see particular one. Both, um, both. So one candle or two candles will form the accumulation, or you will see there will be accumulation, and one candle will be the manipulation, and at the same time the distribution. For instance, if the market is choppy somewhere and has created an accumulation, you see a single candle that now take out the low, okay, and now engulf. So it just engulf immediately. So that engulfing have simplified manipulation and um, manipulation and distribution, the same candle formed. Okay, so let me not complicate it. So look for the simple way to identify, power three or CRT as it were. It's very, very simple. Okay, so the next I'm going to explain in detail is FEG. Now, even though we have used it now, but I'm going to explain it in detail. FEG, market structure shift, order block, right? FEG, market structure shift, and order block. That the next I will explain in this same video, but in next segment. So go and reflect, think, strategize, and all of that. So next talk, I'm going to be talking about FEG, market structure shift, and order block. So that this is one video in overall segment, as it were. So let's look at the gold. Gold is struggling. All right, so thank you, ladies and gentlemen. So the next episode is to talk about FEG, market structure shift, and order block. Thank you. Till I come your way again. So let's learn and apply what we're learning.